Are you like a lot of other people who are starting to change what your thoughts on what are going to happen in the housing market here in 2023? And if you're changing that opinion, you're definitely not alone. In this video, yes, we're going to go over the September 2023 housing market update, tell you everything that's going on, both nationally, but also in a local level here in Southern California, specifically Orange County. Also, I'm going to take a comparison. I've got a chart I want to show you that is wildly interesting. And there's a lot of people that I think are changing what they thought was going to happen this year. Granted, we're more than halfway through the year and a lot has changed since the beginning. So let's dive right in right now. And the first thing that I want to cover is this chart that we'll share on the screen here. And I have this pulled up on my screen. This is going to show the original forecast of these major companies that they're not their entire job, but a huge portion of their job is to predict what is going to happen in the housing market. And if you go down this list, you have Mortgage Bankers Association, Fannie Mae, Stanley Morgan, American Enterprise Institute, Zillow, Wells Fargo, Goldman Sachs, and Home Price Expectation Survey, all major companies, and they were giving their expectation at the beginning of the year and how different they are now. So probably the most staggering one on here is the American Enterprise Institute. At the beginning of the year, projected that we were gonna have 10 to 15% price drops this year, 2023. Well, now their current forecast is gonna be a 6% appreciation. That is a 20 to 25% change in what they thought was going to happen this year. And there's a lot of different reasons, but I'll get to that in a minute. But even Zillow, a name we all know, went from expecting prices to be pretty flat at a negative 0.7, meaning just below 1% drop, up to 5.5% price appreciation. Goldman Sachs, an investment company that a lot of very wealthy people trust their money with, thought the market was going to drop 5 to 10%, and now is realizing we're going to have some modest returns this year, 1.8 returns. So you can see all the numbers on this chart, but this is what I want to dive into is, yes, we can make these predictions, and does it really matter? Not really, because nobody has a crystal ball. All we can really follow is what is actually happening in the marketplace. So let's dive in for Orange County here. What are the actual facts that we can lock onto and say, okay, this is what has happened. What do we think might happen? But more importantly, like, what does it look like right now? Now, one thing before we dive into Orange County's numbers is everything I just shared with you on that chart, these are national projections, national numbers. These do not factor in what they think is going to happen in Orange County. Now, I will say, based on everything we see here, we always see a lot less price depreciation or price deceleration here in Orange County than you will even in Riverside, Temecula, but especially if you look in the Midwest. These places are seeing dramatic pullbacks on price, as opposed to in Orange County, we see a lot softer landing, if you will. At least in times where, like 2008, for example, there were places that were dropping by 50 or 60% values, where Orange County saw about a 30 to 35% drop in value. So even with these projections, Orange County wouldn't be quite as dramatic, and the upside is usually a little bit higher. So with that kind of disclaimer in there, let's go into what we see happening right now. Every time I say this in a market update, I feel like a broken record, but inventory is still really low. I'm gonna show a chart here that goes back 3 years to the beginning of 2020, and it's gonna show you what inventory has done. It went up in the beginning of 2020 when a lot of people put their homes on the market, unsure of what was gonna happen in the world. And then we all know what happened for the next 2 years. Well, as interest rates have gone up, we know that the market has changed rather dramatically, but it really hasn't. It's slowed down in the sense of there are fewer homes selling. There are actually about 40% less homes selling than a normal healthy market. So that means there are much fewer homes to select from, and there's a lot less buyer activity out there. But because inventory is so low, we're still seeing strong prices and even increases. So inventory has not increased anywhere near at the rate that a lot of people were expecting, especially for those that were calling for a huge market crash. So with the inventory staying low, 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 the numbers for August came in at just over 3,200 houses actively on the market. Now, this is more than we saw at the end of last year, but they also rebounded and came up rather quickly at the beginning of this year, and they've fallen back down. So with the changes in interest rates, the market has really stayed steady. We've had over 6% interest rates for almost an entire year now, and the market has not changed very much. Now, here's what has changed is on a different chart, the exact same time frame, I have pulled up prices and what they've done since 2020. Now, we all know that prices from 2020 till the peak in 2022 went pretty much straight up. But what a lot of people don't know is that since the market peaked, it went down and pulled back pricing about 10%. 10 or 15% over the winter of last year, and it has rebounded and gone all the way back up. The median price point of homes that sold in August actually hit just under $1.1 million, which is the highest that number's ever been, even higher than the peak that we saw last year. So inventory is still low, interest rates are high, but prices are still going up and up and up. And this is something that shows that there is, or I should say at least there was, a lot more room for buyer affordability. I remember doing market updates a year and 2 years ago, listening to what our buyers were telling us and saying we are at the top of buyer affordability, and that just wasn't true. Buyers are willing to pay way more than a lot of people thought for homes. There's a huge part of this that is because we're in Orange County, it is such a desirable market. That's one of the major reasons why people are willing to pay these higher numbers. If you went back to the peak of the market last year, which was right around April or July, that was $1,060,000 was your median price point home that sold. And I just shared with you this chart that showed that right now we're almost at $1.1 million. We're over $1,090,000. And keep in mind that this chart here that shows that $1,060,000 was the peak of the market, that's when interest rates were in the mid 4% range. I'm gonna flip to another chart here, and I know we got a lot of graphs, but I wanna really just show you what's going on. If you look at May of 2022, that was about the peak of the market on pricing. Interest rates were right in between 4 and 5%. And now with interest rates being in the 7% range, well into the sevens, we have clients that are in the 7.5% to 8% range on their loans, the price point is actually higher, which means that if interest rates get to that 4 or 5%, buyers are willing to actually spend a lot more money on the property, at least on a monthly payment basis, to buy into Orange County. So here's kind of the opportunity in the market, because as we mentioned in our last market update, which you haven't watched, you probably should go back and watch, is the interest rates are going to come down. I think everybody's in agreement that in the next 12 to 18, 24 months, we're going to see interest rates come down. How far they come down, that's up for debate, but they're definitely going to come down. I shouldn't say definitely, they're more than likely to come down. The question right now is, are prices going to pull back before interest rates come down? Because when interest rates come down, it's not really if, it's when. We are going to see a tremendous amount of buyers come back to the market. That will drive up competitiveness, which will drive up prices. The question is, will prices drop before that happens? So again, I'm not going to guess what's going to happen in the future, but if we look back to this time last year, we started to see prices pulling back. We started to see price reductions and buyers taking advantage of all kinds of different programs like a 2-1 buy down, adjustable rate mortgages, things that they probably couldn't get in a more competitive market. I think that's probably likely to happen this winter again. So there's the opportunity in the marketplace. For buyers, it's getting in the winter before we see a massive change in the interest rate market, which is likely to happen next year. And for sellers, especially for the people who are looking to buy and sell, whatever order you're looking to do that in, if you're looking to move and you need upsize, downsize, you're buying and selling at the same time, taking advantage of this market that we're in right now, getting your home sold for a great price and getting your terms while we're still in a competitive seller's market, because right now we are, and being able to maybe take advantage of a little bit softer market through the winter might be a great situation. So as always, this is really dependent on your unique situation. Every neighborhood's going to be different, but if we look overall for Orange County, we're still in a strong seller's market and there's not very much inventory. There is buyer demand, but it really matches the low level of inventory. So we are likely to see no massive change as far as everything we're looking at right now. Now, if something else comes from left field and totally throws that off, obviously that can happen, but we're really not prepping our clients for any massive changes. We're not seeing a flood of inventory coming to the market. So that leads us to say this September housing market update is a lot more of the same, but it's also a preparation for what is going to happen this winter. And if you're looking to make an opportunity, now might be a great time to reach out and have that strategy session. So if you haven't done that, you can head over to our website, SoCalHomesForSale.com. You can either go search for homes or you can click on the buyer tab and book your strategy session with one of our local experts. And as always, we love to talk about your unique situation because they're all different. If you found this video helpful, hit that like button, send it to a friend, and let us know what you want to hear about in the next newsletter. Again, my name is Christian. Thanks for watching.